Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Monday, May 22nd, 2023. It's now 7:33 a.m. Central Time. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup 3 count. And to negate that for end of today on the 22nd, there must be a close below 4109.90 for the price flip to the buy setup count 1. The D wave up wave 3 printed by exceeding the D wave up wave 1 here, and the D wave down wave 2 shifted over and printed the D wave down wave C. So D wave is on the up wave 4 and the down wave 1. The Megaphone Cell 7 and Count 7 has printed by surpassing the Megaphone Cell 7 Count 5 over here. So that has completed and can continue traveling. However, that is an indication of becoming exhaustion of trend. However, the cell setup count should print a and count 9 cell setup or a 13 for cell countdown. And if that happens and this Megaphone 7 is still printed, then that's an indication of exhaustion of trend. Right now it's just a heads up indication. The 2 supply lines were disqualified on this bar on the 18th. So between those 2 disqualifications of the supply line and the Megaphone Cell 7 end count, that's a little stronger indication of possible exhaustion of trend and maybe fading opportunity in the opposite direction, meaning down. And now with Megaphone 7 turned off, leaving 6 on, we can see that the Megaphone by 6 end count 7 will print if it surpasses the low of this bar, 4048.28, then the 7 will print over here, which could indicate an exhaustion of trend going the other way, which is down, and start looking for indications for more upside. So just by that indication, the S&P 500 is still somewhat range bound. The D wave up wave 4 will print tomorrow on a tick lower than the low on this bar on the 5th. The Fibonacci retracement level for D wave up 4 is at 61.8 Fibonacci retracement, and that would be at 4111.17. So this is another situation where the Fibonacci retracement level is higher than where the D wave down wave 4 will print. So there could be another shift over if the D wave down wave 4 prints on a tick lower than this low for today. So we could get the shift again and then start over on the D wave up wave 3 again. The 50% propulsion disqualified momentum up could become qualified today with a close higher than this close on the 19th, and that will become qualified. And then we'll think about the confirmation bar if that happens end of day today on the 22nd. This supply line became qualified. It did not become confirmed as there was an open lower than this close for this bar. It missed it by a point or two, not by much, so technically not confirmed, but definitely qualified, as we have the supply projection printed at 4255.62, and the conversion line went back above the baseline back here on the 17th. So the conversion line is above the baseline. That's a good sign. Plenty of support there. Conversion line and the middle stark band in dashed blue is there, and that's a 9 simple moving average, and the conversion line is a 9 EMA, so those are close together. Then the baseline is right under there, 4130, and then worst comes to worst, the ongoing demand line will be support. However, with a close below this level for today, the demand line is at 4107.56, and a close below that will qualify that level, but it could act as support if it makes it down there. The S&P 500 support and resistance levels big board chart shows the gray areas at the pivot point and the uptrend line from 06/16/2022. Price in the pre-market hours for the S&P 500 at 8:19 a.m. on the 22nd is 41.92. So to the downside is S2, S1, daily conversion line, and the top of the range, which has been surpassed now, so we'll just consider that a horizontal line. To the upside is R1, the daily Bollinger Band upper band, and the top of this gap zone at 42.19, and the daily high channel 3. So it looks like a pause is in order before it attacks these two upper range levels here. This is where the Fed made their mistake back in 2021. So those levels are right up there for where the daily fortress Fed resistance was at 39.06. It took a lot to get past that. There was a lot of attacks of that level and retreats, and then it finally blasted through there. So you'll get a lot of Fed speak talking this down. Once the level gets up there for the S&P 500, they'll be trying to talk everybody to sell and have the S&P go down up there, I'm sure. The S&P 500 daily AD line is still slightly below its 21 EMA signal line. However, the daily NASDAQ 100 AD line is still above its 21 EMA signal line. And the NDXT, we'll look and see what the NDXT means. And again, Tesla is not in the NDXT, and the equal weighted index here will become qualified with a close above this level, 7206.24, for end of day today on the 22nd. And what it would be qualifying is the relative retracement up 1 for DeMark. And here's a look at the daily NDXT in a stock chart. You can see there was a up close followed by a down close. So an up close today would qualify this relative retracement 0.382 in DeMark. And volatility is still at a low simmer. The ROC 1 is at negative 0.14 and pointed down right around 0. ATR2 is well inside its low volatility green zone, and the PPO extreme looks like it has bumped up above the 3% level, so now it needs to go back after the 4.5 PPO level 4 here, and that's 4.5% above 0. And the New York traditional McClellan breath oscillator to get back to 0 would require 208 advancers over decliners to get back to 0. And yesterday it looks like it was above 0 at negative 337 decliners required to get back to 0. Have a great day.